The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour. It is a beautiful March 14th at the headquarters of Technical Trading and Investing, TFNN.com. And another interesting day out here where everybody, at least in the morning, was more than willing to push it's time to buy every dip of a half a point on the S&P, or maybe you could go as far as 3/4 of a point before you had to buy again. Almost Pavlovian. And I'm probably starting to hear the first hints around probably 12:30, 12:45 in the infotainment, the financial infotainment media, where they actually brought someone on that said, hey, maybe this market's pulling back a little bit farther. They were kind of dumbfounded. How could anybody say anything like that? And, of course, earlier this morning we had Mr. Buffett come out and push the fact that you should only be buying. And I'm going to get into that in just a minute, along with what he has to say. But we're at right now is off about a point on the S&P cash at 1845. And we'll be watching where this market goes into the close. But I suspect, and at least what options are telling me, and some of the other things we're going to look at, Apple kind of starting to crack here. Looks like it's got another 5-7 points down. Will be interesting. So we will take a look at that. Yeah. Anyway, I was just looking at here, just over 2 billion shares. Volume has been light, but of course we tried to push down earlier in the day to 1840, light volume. Tried to push up, light volume. And this has been kind of the pattern most of this week with the end of the day seeing some selling. Question is how many people want to get in front of this train before a weekend, and we'll talk about that in a minute. Anyway, in history, histoire, today in histoire, in financial history, in 1837, one of the first and earliest known cases of insider trading happened. Two French brothers, Francois and Joseph Blanc, are acquitted on charges of fraud. The brothers had bribed the operators of an optical telegraph near Tours to encode secret messages that would disclose the movements of the Paris stock market, enabling the Blanks to take advantage of other investors who had to wait until the next day's newspaper for market updates. If you don't know what a optical telegraph is, basically they had these towers around the town, and before even stringing electrical wires around, they would just read it during the day, and they could move it 2, 3, 4 miles. But there was an optical telegraph between the exchange and the newspaper, and it kind of like just stealing signals off of a pitcher or reading lips off of a coach on the sidelines. That's what these guys did. Anyway, they got acquitted because, of course, it wasn't against the law. They just said that their conduct was improper, but not forbidden by law. And nothing has materially changed since then for high-frequency traders now. They were even trying to mouse with the length of the cables at the the New Jersey facility where all the computers are that actually basically do all the trading. That whole New York Stock Exchange thing and the NASDAQ market site all a lot of set dressing. There's not a lot actually happening at any of those places. It's all hidden in a bunker over in New Jersey. We've talked about that before, but nothing new under the sun. Everybody's trying to gain an advantage, and like I said, nothing materially has changed in the stock market before or since. Anyway, other things in the market out here. A long list of bulls for the last 2 days have been infecting CNBC, not just because I am bearish, but because of the way that they just can't even fathom that a market could pull back even for a short minute or two. And even 5 points is way too much to see a market pull back. This market was only going higher. Basically, the kind of Jim Jones, drink the Kool-Aid, markets can only go one way that you see at euphoric highs in a marketplace. And, of course, they trotted out Buffett today. And anytime you see somebody that's been on CNBC a couple of times the weeks before, fly to New York and show up in the morning, I am somewhat interested in what their agenda is. First time I remember seeing Buffett and really understanding what he was like 1976 or 77. And he was busy telling everybody why Coke was the company of the future, and there was absolutely no way that he would sell the thing. And I noticed that over the next week, it was having troubles. This may actually have even been 98. And it was kind of interesting. And then I looked through the filings and noticed back then even 5%ers didn't report that same day. I think that level of reporting in the market came later. But I remember looking back and seeing the filings that came like 20 or 30 days, and the guy was selling all along. So I knew he was a liar, or he'd changed his mind, but my guess is that he was a liar, or at least on this point. Also, along the way, he, especially in the early 2000s, probably maybe 2008, always disparaged options and any kind of derivative product. He sent his first number one out to say that it was sewage. He called it some names. I can't remember what it was, but options are crap. Well, guess who right now has the biggest hedging operation of any company or any individual in the world? Yes, that's right, Mr. Buffett and his Berkshire Hathaway. So generally, anytime he says something, I'm very interested in it. And I also like parsing what he has to say. When I was young, my mom used to say, well, were you at a bar last night? And I said, Mom, there are 97 bars in this town, and I haven't been in one of them. Now, does that mean I was in 96 of them and just hadn't been in one of them? That's basically the kind of parsing you pretty much have to do with Buffett's. This morning he said, I didn't sell anything based on China or the Ukraine news. Well, that's not the question. Did you sell anything? Not the motive for you selling something. Did you sell anything? And he left the impression that, no, he hadn't sold anything. My guess is you're going to see that when the filings come out that he did sell a bunch of stuff, and he is selling stuff. Maybe he is, maybe he isn't, but I would warn that that I didn't sell anything based on China or Ukraine news is not the same as I didn't sell anything. And you have to, yes, weapons of financial mass destruction. He called them everything. He's got a big building in downtown Omaha that's just chock full of high-speed computers and a huge operation of hedging. So interestingly enough, anytime he says something, I'm wondering just how far he's going to be away from that and distance himself. And, of course, because he's probably the biggest guest that they could get on CNBC, they're never going to call him on his BS, bovine excrement. And just a thought. But just remember that. There are 97 bars in this town, and I haven't been in one of them. I've been in 96. And when you listen to them, you pretty much have to Think about all of it. Now, some people are talking up D-Day for the Japanese economy. They have a consumption tax, like a value-added tax. It's going to go from about 5% to 7.2, I think. That will be on April 15th. The thought is that Japan's already started to head down on this news, and by April 15th, we're going to see a severe retraction, a lot more than we've already seen in the Japanese economy. But a lot of people are saying, not only do the day that we have to pay taxes, but the day that Japan will have to pay massively more in taxes with their value-added tax scheme. Alibaba is finally coming to market. It looks like they've been negotiating with the U.S. government to try to make it and get it to come on the U.S. stock exchange. China has been bristling about what requirements that you will have to give, because they think it gives people an unfair advantage if the U.S. government is looking into the finances of Alibaba or any of the other companies over there that I think are highly suspect. I would say that there would be a discount anywhere from 25 to 50% on the multiple that I would pay for a Chinese stock, just because I know that we don't have the full books on any of them. My guess is a lot of them are smoke and mirrors to begin with. Alibaba, probably a little bit more real than most of the other ones out there. Who knows if there's any truth to any of the filings or the books that they have on it. And I don't think you'd ever know until they go bankrupt one day, if they ever do. But Alibaba is preparing to file its initial public offering in the United States as soon as April, Bloomberg reports. I think I brought this up a few days ago. But they've been trying to negotiate the U.S. government out of all the requirements that a U.S. company would have by talking about putting it on various exchanges and just having it trade as an ADR. I think they gave up on that when the U.S. government said, you know what, we're going to have the exact same requirements for your ADR as if it trades here in the United States, so it's not going to do you any good to push it over there because we'll just make sure no one can buy it. And, of course, everybody here in the U.S. That's on the street, my guess is you're going to see 20 different companies involved in this bloated pig. But look around, probably them trying to get this thing out the first week of April. I had somebody make a comment. Maybe someone in the den saying he has his own hypothesis. Maybe he'll post it there and I can read it. But very wondering about why Buffett on CNBC 2 times in the last 2 weeks. Anyway, we'll be back in a minute. I got another comment, too, about daylight savings time.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we're going to be watching this market closely as we go into the end of the day and see what we have. But it's going to be interesting nonetheless. Okay. Alibaba, we talked about that. Looks like they're going to try to push that out the door sooner rather than later. And it looks like it's going to be either on the New York Stock Exchange or the NASDAQ. Of course, the NASDAQ much cheaper, but I don't think it's going to matter to them. They'd love to have this on the NYSE where they could control a little bit better. Was going to bring up daylight savings time. I know a lot of people thought that and don't even think about the change in the Eurozone close, which normally is at 11:30 Eastern time. Of course, this week it's been at 12:30. But daylight savings time in Europe runs till March 30th. So we've got 2 more weeks of the European markets closing at 12:30, and it does change the character of the market for somewhat. But what can you say? Anyway, UK was off 0.4, Germany up to 0.4, France off 0.8, Spain off 1.4, and that's probably all that really truly matters. Asia Nikkei tumbled another 3.3 to 1 month low. Hong Kong's Hang Seng lost 1%. China's Shanghai Composite slipped 0.7, and even their big banks out there are having a lot of problem, down 8.3%. Several months ago, maybe even 2 or 3 months ago, I started saying that there were problems in the banking sector in China, and we'd seen so many of these little hiccups in what's called the SHIBOR, the interbank lending rate. And I think those little hiccups are what has prompted the Chinese government to actually start wringing some of the excesses out of the system. But even then, there was another Chinese government official out last night saying that he thought that there would be 10 or 15 more bankruptcies, that this was just the beginning of them getting rid of people that were cooking the books in China. And, of course, when you cook the books over there, you don't go to court. You go to a field, and they shoot you in the head, and they send you a bill for 20 cents to your relatives, and they have to pay the 20 cents for the bullet. And I have a feeling we haven't seen the end of these bankruptcies, nor the bills going out for 25 or 25 cents to the relatives of these people that probably cooking the books at least somewhat. And of course, everybody wants to get shorty, and attitude plays a big part about it. But besides being a good movie in the mid-'90s, still an interesting idea. And I love the Leonard Elmore books, and of course this was one of them. But I certainly like his other show that's running on, I think it's running on FX. I think it is. Justified. Another great book. Anyway, it is a mad market out here. So we'll go on to some other things. Wanted to get into Apple. This one you got to be watching fairly closely. The reason why is this thing, at least intraday, I want to be watching this to see whether it can close below 426. If it does, I suspect that it is going to be making a run for the 496 level, which is long-term confluence levels. And actually, you've got confluence levels from the bottom and the top right in that area. Longer term from the upside, you've got 415 to 507. And, of course, shorter term, you've got that 496 to 502 level. So it should find some level of support on both of those. But I suspect it is going to be coming back to about $500 over the next week if we have any kind of market weakness at all. Now, today, volume is not really increasing, but we haven't gotten anywhere to the close, and my guess, when I look at what the options are telling me, this market wants to go down and tag about 1810 on the S&P cash. And at that point, we may get a bounce, but we're going to be watching it at that. Anyway, we're going to be back in just a minute. In the meantime, think about giving me a call at 877-927-6648, at emailing me at path@tfnn.com, or putting a note in the den, and we'll take a look at your stock. But I've got a handful of other stocks that I'm looking at, and we'll get back to them after the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we had a couple of questions, and I'll try to get to them fairly soon. Probably the most interesting thing to me is the dollar index is off 17 cents today. Just to see the dollar weakening out here with all the issues going on around the world just seems rather interesting. Of course, we had gold up a lot stronger than it is now, still up $5 going into the weekend and at $13.77. But gold just keeps acting like there's nothing that's really going to stop it. Of course, you could almost look at today as being a intermediate high that could get retraced. But boy, every time you think it does, it just continues going on and continues to look like it's in some kind of fifth wave. To me, a fifth Elliott wave where it just goes up a few bucks, $5-10, comes back 10, 15, then goes back up over maybe 5 days, maybe $30-35. Pulls back a little, and that is the kind of movement that you see in the last wave of a giant bull market, and pretty much what you saw in the late stages of 1929 when these markets really go up on light volume and just continue to go up on light volume. And it's not the first time it's happened. I've seen it happen in many stocks where you just go, what's happening here? I just don't understand this stock going up on light volume for month after month after month, day after day after day. And normally it is that last major move in the fifth wave of an Elliott wave move that you really can't tell in respect from looking at it. But I tell you what, from being in it, it is just that. It's just a little bit higher every day, not a whole lot of volume, not where it's $50 or gold's $50 more a day, but it's always $5, $10, $3. Yeah, gold GLD is 6-month high. No sign that this thing is ready to turn around just yet. Maybe it is the moving of the dollar itself that will be it. Anyway, got a few things I want to talk about. And since I will not be on Tom O'Brien's show today, he's got a special guest. Thought maybe I might just pick out a few of these things that I wanted to talk about before the end of the day. People asked me about Amazon. I forget who it was, and whether or not I would short it. And I said, I thought there were better shorts out there. Had a little bit of reversal yesterday as it got back into that gap. Certainly doesn't look good. Little hammer candle out here today. So still can't say that I want to go this to go much higher, but looks just about like the rest of the market. The only thing is maybe this thing's got $50 down. Certainly has already had its downside, but maybe this thing has got one move up, or maybe they're going to wait and trash this after options expiration next week. But moving the prime to $100 from $80, I don't think changes anything. I think a lot of people have nothing to talk about in the markets. Probably not a big deal. DARPA, the Defense Advanced Research Projects Agency, is going ahead with contracts to make that laser that everybody thought that Buck Rogers was going to have 50 years ago. But certainly looking at these ganged array lasers and the optical phased array lasers, but there's a great deal of evidence that they're going to be able to improve and basically have enough power to hit a target 7 kilometers away or more than 4 miles away and fry it. The OPA used in these experiments consisted of 3 identical clusters of 7 tightly packed fiber lasers, with each cluster only 10 centimeters across. Anyway, looks like a kind of a little rocket launcher design, but just a whole bunch of lasers put together and combined with fiber optics to fry you instead of hit you with a lead bullet. We've been talking a lot on this show and in the Tech Insider Hour about nuclear power and how that sector actually looks fairly decent. And we already know that China had kind of pulled back on. Oh, we've got a caller. David, how you doing today?
Yes, how are you, Mr. White? Hello.
I am good.
Okay. Well, actually, I got a couple of questions. One of them is I'm trying to figure out this sector of conglomerates. What is that?
What are you talking about?
A sector of they have it like on the Scott trade of conglomerates as a sector, and it seems that it's
like an ETF or something, or an index.
They say it's a sector. They list it as a sector.
There is a sector called conglomerates, and
I don't.
What's the deal on that though?
I just trying to understand. It looks like they change stocks all the time in that sector.
Conglomerates generally pretty big companies that have been around for a long time that own, like General Electric that own hundreds, if not thousands, of different businesses. Those don't tend to change a great deal. So I'd be surprised if that does. Normally they move so slowly that I never pay any attention to them. Is there like a specific question you think that there's a problem with something like GE or something?
No, I was just wondering what they put in there, because it doesn't always seem to be the same stock.
They do, but I wouldn't think conglomerates. I don't know what you're looking at or what site, but for the most part, conglomerates really don't change that much. Hang on just a second.
Okay, so basically,
Okay. Hang on just a second. Now, are you watching on Tiger TV?
no, sir, I'm not.
Okay. There is a website that I look at. It's called barcharts.com/stocks/sectors/SIC.
Okay.
And that'll give you all the different SIC codes, the way that they actually split the market up. And you can take a look at that. But I like that particular site because they actually give you the weighted alpha of how strong each particular sector is. But I'll read that off again. I've got it on.
I'll re-listen to the show.
Okay.
The one I was calling in about, though, is EOG Resources.
Okay. Just so other people know that if they want this link, just to email me at path@tfnn.com. But I look at this sector list a great deal just because they have all the different sectors on them. Of course, everything's been going up here lately. But just before we get to your stock, we got plenty of time here. What do you think is the weakest sector out here?
Oh, I'd have to say financials aren't looking too good.
Okay. The weakest sector, as listed in the last 30 days, is metal mining. The next weakest sector out here is coal mining. And there's some other ones that are nebulous. General merchandise stores, food stores, apparel and accessory stores, petroleum refining and related industries. Those are all the worst performers. The best: motion pictures, tobacco products, motor freight, transportation, engineering, textile, meal products, chemicals, and allied products. Anyway, it's always interesting to watch it and look at that because you always see, a lot of times it's hard to figure out when some of these things are moving. But I always like looking at buying the bottoms of these really hated sectors. But I don't think either metal or coal out here is anywhere close to low. But sometimes you find these sectors that are just super hated in this. But like I said, anybody wants to email me at path@tfnn.com, I'll be glad to send this link to you guys. Okay, EOG Resources. What are you thinking about doing on this?
Okay, I'm looking to buy some calls on this, but they just they announced a 2-for-1 split and raised their dividend.
Yep, certainly looks interesting. There's two levels of confluence. They're fairly wide, $8, $170 to 162, and there's one that's back at 150 to 142, 143. Other than that, maybe the next level to get back in here is if this thing could get back to 156.01. But you've got two highs out here. The one from October 22nd, they had 1.9 million shares. You had the same one on March 5th. It got to 193 on 1.9 million shares. This thing just looks like it's in a bigger trading range between 156 and probably 190 or something. So,
okay,
if you wanted to buy calls, I certainly think you got a long time to wait on it. This market would really have to take off, and I'd have to be totally wrong about being bearish here. But, go ahead.
I was showing 2.8 million on that March top.
You had 2.1 million on the 4th. You had 0.8 million on the 3rd. But when you got up here, you got 2.1. And so, if you go anywhere and look at the, within 0.5% of the high, you'd get that 2.8, which is correct. But here's what I did like about it. Took a long time to go up. The energy is about the exact same down as it goes back up on the power law vector indicator number. It went above the high. You did have, as it touched it, that 2.8 million shares. It closed below it the same day with that volume. The next day it tried to go higher with 2.1 million shares. Okay, and then it closes right back in it the next day. So everything out here says that why it had some energy. Maybe you get one retest of that 193 area. It doesn't say that this thing is really ready to break out and really start to run. So I would think this thing is more in a realm of a trading range between 156 and 190, 193.
So this might be a good short if the market turns on down?
No, there are much better shorts out there than that. I mean, you can look at, we've gone through so many of them in the last week, but like American Express had a 15 million share high, got tested with a 4 million share high.
Right.
To me, testing almost the same volume, energy, same energy, almost the same, going up and down. That's why I'm saying that that's probably in a trading zone or trading range. It can't break out. The energy is about the same up. It'll probably come back down, and unless the energy really starts picking up, that thing's probably going to find some level back there. But, you know, stocks that are giving huge signals are things like an American Express. AIZ is another one maybe you want to be that we brought up. Assurant. This one had a 1.7 million share high, tested with 1 million shares. You know, if EOG could have broken above those highs, stayed above them with decent volume, maybe gone up to 200 and then pulled back with light volume to 190, maybe I could see some kind of bullish bet on it. But my guess right now, or the way I'm thinking the market has been moving, is that you had this market that had a lot of money sloshing around in emerging markets. Everybody got scared and moved all their money over into these high flyers in China. Now China's got a problem. Everybody's moving all that money over into U.S. equities. U.S. equities are starting to look a little weak now, so everybody's moving that money from U.S. equities and buying gold. And it's just this endless procession of trying to find something that will go higher and chasing the cash. And eventually all of those will, you know, it's like the Titanic. It's going down. You can go back to the back of the Titanic. You're just going to go down an hour later. And my thoughts are that it's just been, they're just shuffling the chairs on the deck of the Titanic. The markets have been running very hard, and they need a retrace. So I wouldn't be long, I don't think just about anything. Maybe gold, but that's about it.
Okay.
And gold may be just running because they're trashing the dollar out here again. Like I said, the dollar index down 19 cents today. But it's, you know, once it broke that 80 level, problematic to say the least.
Right. How will the split affect this stock now?
EOG?
Yes. Does that change the...
It changed the character way it trades, but normally it doesn't change the trade at all. What's the split going to be?
It was a 2-for-1, I think, is what they're doing.
Yeah, it's, you know, normally when splits affect the actual trading of the stock is when you can get it back down under $10 or around 10 to $20 or something.
Right.
Where retail investors will buy it. If this thing's $100, it's not going to change the retail investors' view of this. We'll be right back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, market weakening a little bit down to 3 points. I said earlier, maybe I said earlier today, maybe I didn't. I think that we're probably going to close somewhere around 1835 today. And I think we still have that door open. I am looking for 1810. We've got a Fed meeting on Tuesday and Wednesday, and I think both of those things are going to put into a low volume move into Wednesday. Probably a bounce out Wednesday afternoon on somebody trying to hallucinate that they aren't going to cut yet another $10 billion. And, of course, a little bounce into Friday's expiration. I think all those bounces are going to be good opportunities to add more on. But I think we got 1810 on the S&P cash out here. Anyway, let's go to Chris in Nodesha, Wisconsin. I always have a problem with those American Indian names. Anyway, how are you doing today, Chris?
Hi, dude. Nashota.
Nashota. Okay.
Yes.
I'm used to a little town called Neoshotea, Neoshotea, that was Nashota, and I can't even remember it now. All I remember is the Boy Scout camp was there. Neodesha? I think it was Neodesha. Anyway, go ahead. What do we want to look at today?
The IWM, the Russell, is showing a little strength, although right now it's weakening. But overall, for the day, that index is positive and everything else is floundering.
What I've noticed is two things. that everybody that's long is buying the IWM. Everybody that's short is buying downside options on the SPYs. So that must be the new go-to hedge out here, because I see that's what I'm following. The SPX or the SPYs are showing that at least on the cash on the S&P, we should probably tag 1810. And I'm just thinking we get into Monday. There's not going to be a lot out here to hang your hat on. We're in a quiet period for the Fed, so they can't go out and try to boost this market probably until late Wednesday afternoon. And so I think we've got probably a good, at least low volume move back into 1810. And, we've got, I was looking at this, I don't know if you heard me earlier, I was talking to Tom O'Brien about the financials. And we looked at the XFX, the financial ETF, and it had a little bounce like this. And then you went and looked at all the stocks, and they were all testing previous highs on half volume or tiny volume, like AXP and a lot of the banks, BBT and some of the other ones. And I go back into looking at all the charts. It's the same thing. There were a lot of people that had concentrated positions in this IWM, and they just ran them all. And that's where I think you had that giant volume spike at the top. You didn't have that in the underlying stocks below it. And so I'm going to say that this is a aberration, like I think I saw in the XLF.
Can I ask you another question?
Sure.
On the SPY, I presently have some puts that I own for April on the 180s. What do you think? It's just positive today, but it had been negative here for the last week. You think I should hold them, or?
I think you're going to get one chance at 1810.
Okay.
So I don't know if that's Monday or Tuesday or Wednesday, but I have a feeling that somebody's going to somehow hallucinate that the Fed is telling everybody they're not going to cut much anymore. And I think that's just wishful thinking. Probably going to get a bounce out of that, and I'll probably be shorting that one too. But I think that's going to be more of an issue of expiration than anything else. I want to thank you for the call. We'll see you all Monday, same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.